Yo, what's up, guys? It's Trader X again out in Soweto. So, welcome to Forex trading tips, price action, and highs and lows, right? All right, so without further ado, let's jump into it. All right, so before we go ahead, guys, I just want to say Happy New Year to each and every one of you guys, and I hope you all are keeping safe in these difficult times, really. I've had a lot of things go on in my life, and that's the reason why you haven't been seeing any video uploads on my end, right? So, yeah, I'm still well and alive for those who are worried about me. Still well and alive. Yeah, so let's get into it, guys. Let's get into it. So this is going to be a quick lesson on price action, right? And how you can actually, it is a quick lesson on price action as well as the importance of highs and lows, right? Daily highs and lows, right? Now I'm going to be showing you this based on the daily. Based on the daily, it's going to be, for more of your short-term kind of traders as well as your scalpers and all, right? So if you trade anything below the hourly towards maybe the minute chart, I'll show you how you can actually use the daily chart to find the correct bias, right? And why the highs and lows of those particular days are actually quite important. And if you're a long-term kind of trader, or position trader really, I'll show you how you can do it based on the weekly, right? But the most important thing lesson that I'm going to be teaching you guys is the importance of candle highs and lows, right? And how you can literally tell what's about to happen just by looking at the highs and lows. Now, why I'm showing you this is because I realized that in my previous videos, I'd shown you how to identify a possible change in direction, right? What a lot of people just don't realize is that you can actually see it on the daily chart, right? On the daily chart, if you, like I said, if you're trading anything less or lower than the hourly chart, well, from the hour all the way down, right? With exception of the 4 hour chart. And if you're trading long term, like I said, it could be the weekly, the daily, or the 4 hour chart, right? But I'll show you in the long term. Let's just keep it a little bit simple so you all can understand, right? But it's really based on that really the importance of knowing and seeing the possible change in behavior, right? That's about to happen, and how the daily chart or any bigger time frame will actually solidify what it is that you're seeing at a smaller time frame, right? And that will help you in understanding whether a pullback is about to happen, whether it's a continuation of the move, or if it is a pullback. And in any direction, it could be in an uptrend or it could be in a downtrend, but it will give you an idea, or it will somewhat of an idea, um, to kind of see and understand what's about to happen, right? But like and another thing, guys, that I just want to say, guys, is trading, and I keep saying this, trading requires a lot of patience, right? So this is not a perfect strategy, and in some instances you'll have to wait, sometimes a day or two or even a week, for something to really happen. But you need to see what I'm showing you happen in order for you to have that confidence, in taking that particular trade, right? But a lot of things need to kind of line up in order for you to be able to jump in, right? Okay, I've said too much now, but let's take a look. What am I talking about this, right? So let's go to my trust blackboard here. So what I'm talking about is, in particular, highs and lows, right? What I'm talking about is highs of a candle, right? So we already know that this here is, suppose that this is a bullish candle. This would be the close, this would be the open, this would be the low, the wick. The lower end of the wick would be the low, and the higher end of the wick would be the high, right? So we're not looking at the open and the close. We're just going to be concentrating on the high and the low. The high and the low is the higher part of, suppose this is a bullish candle, the higher end, or where the wick ends really, and the low is, where the wick ends on the bottom, right? And it'll be vice versa if it is a bullish candle, I mean a bearish candle, right? A bearish candle, well, it's not vice versa. The high would still remain the same. It would be the higher end of that candle and the lower end of that candle, right? So now this is something that I picked up from my days of studying volume spread analysis, right? Which stresses the importance of the high, the low, as well as the open and the close. But for now, like I said, we're not going to be concentrating on the open and the close of the candle. What we're most interested in is the high of the candle, which is the spread, right? As well as the low. Now, the spread, I will be mentioning this. The spread is the overall price movement of that particular candle, right? So that's what I mean by spread. You all need to understand that. So this is the spread of the candle. What I mean by the spread is from the high to the low, the space in between that price covered between those two areas. That's the spread, right? But like I said, we're predominantly going to be concentrating on the high as well as the low. But like I said, in some instances, I will be referring to the spread of the candle itself. Okay. All right. So the importance of this, right? Now, let me just explain one more time. The importance of this is what I think a lot of people just don't understand is how important it is for price. Suppose this is a bearish candle, right? Let me just do this. So, bearish candle, it's red or it's green. No, it's red or black, doesn't really matter. And then there's another candle that does something to this effect, right? Something to this effect. What a lot of people don't realize is the importance of seeing price actually do this, right? And suppose that we were looking at a bigger time frame. We'll go into the charts and I'll show you exactly what I'm talking about. But it's vitally important. You all need to understand that it's vitally important to see price do this, right? When price takes out, say, a previous day's high and does not go after the low, you already know that whatever's happening here, or actually the bias of this particular candle, the following candle that we're looking at, right? We already know where that price, or we can predict where price is actually going to go, just as long as it takes out the previous day's candle, right? It is vitally important, guys, for you to understand what it means for price to take out a previous high or a previous low. And this is exactly what I'm talking about, right? So in most instances, some instances, it will sometimes look something, let's just say to this effect, right? So it will be a small candle, a big wick, and a small thing, and a small wick to the downside like this. So all of this is literally the same thing that I just showed you with this type of candle here, all right? We're not going to, like I said, we're not going to be concentrating on the bodies of the candle, but we're going to be concentrating on the spread, right? How, where the price reached, and how, yeah, where price reached really, the highest that it reached as well as the low that it reached, right? So don't worry too much about seeing candles that look like something to this effect to the left, right? I'm not a perfect drawer, guys. I'm using my mouse here. So don't worry about seeing candles that look like this. And we'll get into the charts and I'll show you exactly what I'm talking about, right? Because in some instances, this is what's going to happen. In some cases, you will get inside day bars like this here. Right? So an inside day bar is a candle that fits within the previous day or the previous candle's spread, right? So the high and the low. So this one here fits right inside of it. Sometimes you will see stuff like this, but I will explain as we go along. So now, like I said, guys, the importance of knowing a high and a low, or knowing what it means for price to break a high and a low, will literally give you the correct bias that you actually need to follow, right? So now let's jump into the charts and let me show you what I'm talking about, because I do realize or think that I might not be making any sense to you guys, right? But let's take a look at this. So we're looking at GBP USD, right? We're looking at the sterling now. So here's what I actually mean, right? So now, knowing that information of what happens to the high and the low allows you to be able to anticipate a reversal that's going to happen. Yeah, I think I'm on the right track now, guys. If you're unfamiliar with me, I just say things off the top of my head. I don't plan anything, so please be mindful of that, right? So please be mindful of that. Okay, so knowing what happens to highs and lows prepares you, for what's going to happen next. And let me show you what I mean. So in my previous recordings, I had shown you that this is how you identify a possible change in direction, right? So in the event of an uptrend, what you want to see is you want to see price, yes, print those higher highs, but eventually you want to see it take out the previous low, right? Um, Higher low rather, on its way to establish or find a lower low just before it finds a lower high, and then the sequence will continue. So in my previous recordings, I'd focused predominantly on showing you this, but this was just me showing you this on a smaller time frame, right? Like I said, what a lot of people don't realize is you can actually see it on bigger time frames, right? So for instance, um, the daily chart. I follow the daily chart predominantly, and I day trade the 15-minute chart. Right? It doesn't really matter the 15, the 30, or the hourly, but I'll go as far as the hourly, not the 4-hour chart. Right? But I'll go as far as the hourly while following the bias on the daily chart. Right? Now, identifying what happens to highs and lows will actually allow you to jump on. It could be a continuation move, or it could be a pullback, right? But like I said, the importance of you knowing this, um, yeah, well, the importance of you knowing this will better prepare you for what's going to happen next, right? So, what do I mean by that? What do I mean by what I've just shown you here? Like I said, I had shown you this based on a smaller time frame. What do I mean? How can you identify this? Well, the easiest way to identify it is as follows. It's not the easiest, but it is the only way to identify it. Is say we were in an uptrend, right? So these are the candles, and then you get another candle that looks like this in an uptrend, right? And then you get your final candle. Let's just say it looks like this, and it closes above the previous candle here, right? And then right after that, you get another candle that looks, let's just say something to this effect, right? Not actually, but something that looks to this effect, right? So let's just do this, give it a little wick and a longer wick to the downside, right? So it looks something like this, but let's just make it a little bit more perfect, right? So it looks something like this. This is not an engulfing pattern, guys. I'm just drawing it to just illustrate. It doesn't really matter how the candle looks, right? But it looks something like this. This is what I'd shown you that looks something like that, right? On a smaller time frame, it will look something like this. But when you look at it on a daily chart, it will be something that looks like this. I predominantly just concentrate on the three candles, right? Not even the three candles, but the two candles. I'll show you how to identify this, but it looks something like this. But when you zoom in to a smaller time frame, it will look something to this effect. Remember, we're looking at price structure, right? And this is how you see what's going to happen next, right? So now let me show you how I use it so that you can better understand what I'm actually talking about, right? So for instance, let's just take a swing. Ideally, I want to get a continuation move. Let's just get our auto snap off here. I want to get a continuation move, or rather, this one here looks, it's not really perfect, but I just want to find something that's a little perfect so y'all can understand what I'm talking about. So right here, you see these three candles, or these three candle formations here. We can clearly tell on the left that price is in a downtrend, right? And if you look closely, let me just expand that a little bit, blow it up a bit. And if you look closely, this candle here, this bullish candle here, is what I was talking about when I say, you want to see what happens to the previous candle's high or low, right? So these three candles is how you can tell what's about to happen next. So if you were looking at it like this, if I can just grab your attention to the far end of the screen, right? So where's my F12 real quick? Uh, Far end of the screen. So when you see this candle here, do this. I'm just put an arrow. Well, there is an arrow pointing above, pointing up to it, right? So when you see a candle that looks like this and you compare to the previous candle, you can clearly tell that that bullish candle closed way above the spread of the previous candle. But also take into consideration the fact that bullish candle never tests the low of the previous candle, right? I'm sure y'all can see that. I hope y'all can see that. But you can clearly see Let's just see. So the low of this last bearish candle here is 22509, right? And the low of the next candle is 22571. So you can clearly see that this one here, yes, it went all the way down, but it did not test or even break the previous candle's low. But if you took a look at, or if you take a look at the high of the previous candle, it's currently sitting at 23888, and the bullish candle closed at 24006. So you can clearly see that this candle closed higher or even tested. It could even test it or close higher. That's absolutely fine as long as it does not test or break the previous day's low. But when you see this candle here, this is what should prepare you in understanding that price, there's a high chance that price is actually going to move higher. Does that make sense? So when you see a formation that looks something like this, the last candle should reach lower in the case of a downtrend or higher than the candle before it, right? And then the next candle should not test the high or the low of that previous candle, but violate the opposite end. I hope I'm making sense. So in this case, you can clearly see that, the last two candles here, one broke, or let's just say this candle here with the moving arrow reached lower than the previous candle. Not only that, it did not violate the high of that previous candle, which is up here, but it continued on to violate the low of that previous candle. This is something that I learned while studying, what is it again? Volume spread analysis, VSA, right? The importance of price breaking previous highs or previous lows. So you can clearly see that this one here, this candle here, reached lower than the previous candle, and it violated the low of the previous candle, but it did not break or even test or violate the previous candle's high, right? So this basically tells me that it was going after liquidity to the downside on the left hand side, right? So don't mind all of that. Just know that, it shouldn't violate the previous high, but violate the previous low, the previous day's low, right? And then the next candle should not violate, even though this candle here reached all the way lower, the next candle should not test or even break the previous candle's low, right? But instead, it must do the opposite, break and violate or even test the previous day's high. So you can clearly see what happened here with this bullish candle. It broke and it continued to close above the previous day's high, right? So now this should prepare you in understanding that there's high probability that the next candle is going to be a bullish candle, right? Because price never makes any mistakes. You'll need to understand this. Price never makes any mistakes. It will take out the high or the low, and then it will continue in that direction. Sometimes it will test both the highs and the lows. When it does that, you'll have to stay out of the market, and I'll show you an example, a perfect example of where price actually does that. And sometimes it will be inside day bars, which I'll also show you. But this is a perfect example that I'm showing you. When it's this perfect, you best believe that you will be getting some trades, some good trades in the long run. You will be getting some good trades right after that candle. But this candle here that violates this previous candle, this, you shouldn't be taking trades on this one. Well, you could take trades on this one here, but it's kind of like, I like to refer to it as a gray area, so, or a gray day, essentially, because this day is purely and solely responsible to showing me what is about to happen, really. And I want to see price do that. I have to wait for this day to come to an end in order for me to be able to conclude that the following day is most likely going to follow in the direction of that previous day. But you can be aggressive with it, and I'll show you how you can be aggressive with it. Just know that in more cases than not, you will lose your trade. So this is the reason why I choose to stay out, and I want to see price close on this day, and then the next day I'll be trading in the bias of this particular day. Does it make sense? I hope it does. Now let me show you what this looks like, what this swing looks like on a smaller time frame. So suppose I go on the 30, or I go to the 15-minute chart, right? So we're looking at 3 days prior to this, so it's the 30th of June, right? So I'm going to go to the 15th, May, June, and I'll show you what it looks like. It looks just how I showed you on my blackboard, my infamous blackboard. Let me show you here real quick. There you go. So you can clearly see the sequence that I was actually talking about, right? Where you want to see price structure break. So we can see price made a lower low here, and then give us a lower high, and then followed by another lower low, right? And from there on in, it kind of gave us this lower low there, lower high rather, and then it gave us a higher low. Can clearly see that higher low, and then we get that price structure break to the high side, which is exactly what I kept preaching in my previous videos. So you see what happened there? It's the exact same thing that I showed you here. So where price prints higher highs, actually let's do it in the direction of what I'm showing you now. So it prints lower lows and lower highs, and then finally you get something that does that, taking out previous price structure, right? And then we get another higher low and followed by a higher high, which is the exact same thing that happened here. I'm sure you all can see that. Price structure break happened here, and then we got our first lower high here. That's price structure break, pure price structure break, right? But you can see that, like I said, based on the daily, you can actually reduce it to only just 3 candles really. And as you can see right there, you can see all of those 3 lines that I mentioned to you guys. Not the 3 lines, but all of those lines that I just showed you based on the 15-minute chart is right there. So if I remove all of those lines, you can clearly see it's just limited to only 3 candles on the daily chart. And this is how you can tell that price is about to move in the opposite direction, right? So that's how you can better prepare in knowing what's going to happen next, right? So that's what I do. So now, like I said, this day here is a gray area. Let me just, or a gray day rather. Let me just remove this box here. And let's just remove the arrows, delete all arrows. So with this marker here, this green vertical line on the 30th of June, right? So this day I wouldn't be trading, right? Because like I said, there's a lot of uncertainty when it comes to that particular day itself, right? Because we don't know if it'll go down or if it'll continue on higher. So ideally what I want to do, and this is the gray day that I'm talking about here, I don't want to be trading here, right? What am I looking at? That's the hour. I don't want to be trading here, but I want to be trading the following day, which is right here, because I'm expecting price to continue moving higher, right? But I'll do that on the 15th. So let's go over to the 15th. So on this day, you see that? So that's how I'd be looking at it. Now, when I get to the 15-minute chart, bear in mind that I've identified the 3 candle pattern, right? So when I get to the daily chart, I mean to the 15-minute chart where I execute my trades and I take my profits and such, all I have to do here is just wait for price to give me a pullback in the direction of, or break price structure in the direction that I've anticipated. Does that make sense? So how I would plot it here on the 15-minute chart or my smaller time frame, I'll take a look at the spread of the previous candle, which is right here, right? So that's the high of that particular candle, and we can clearly see that it was violated here and it was broken, right? So that's the gray area. Now the gray day, let me just mark that real quick so you all can understand what I'm talking about here. So I'm just gonna say gray day here. So this is the gray day right here. This is where I'm not going to be trading. Like I said, you could be aggressive with it and trade on the gray day, but it's not for me, right? So I'd be trading on this from this turquoise block all the way higher, right? But what I want to see though is, before I can actually trade, what I want to see is, like I said to you guys, I want to see price not go after the previous day's low, right? This is very important. I don't want to see price go after the previous day's low. So on this gray day, the previous day's low is on the gray day low. There's the low right there, right? So I don't want to see price make its way all the way down here. But I want to see price give me a sequence of higher highs and higher lows in the direction that I'd expected, right? Sequence of higher highs and higher lows above the previous day's low. Now, when this happens, or when this price structure break, let's just put it at that, when this price structure break in the direction that, you know, the gray day suggested, that's the only time that I'm going to be jumping in. For instance, right here, we can clearly see that that's price structure right there. Now remember, the 15-minute chart or any smaller time frame has its own price structure, so you need to follow that. So the daily chart is only responsible in showing you where price is about to go, right? Or which direction price is about to turn. And when you get to your smaller time frame, you have to respect price structure based on that smaller time frame. So you will already have an idea of the bias of the bigger time frame, and that's the bias that you need to follow when you get to the 15-minute chart, right? So like I said, on this day, on the turquoise day with the block, this is where I'm going to be looking for a sequence of higher highs and higher lows, which was dictated by the gray day, right? The gray day took out the previous day's high and it did not take out the previous day's low, which automatically suggests that price is about to move in the opposite direction, right? So now that I know that, well, let me not remove the high here. It's just for illustration purposes here. So let me just remove this one here. Now that I know that, now remember, I don't want to see price come down all the way to the previous day's low, which is right down here at the X. But I want to see it violate the high of the gray day, right? Which it gladly does right here. We can clearly see it breaks the gray day's high as well, right here. Now, when that happens, like I said, all I have to do is just wait and actually wait for a sequence of higher highs and higher lows. Now remember, in order for you to be able to successfully trade anything for that matter, you need a strategy that's going to help you take advantage of the pullbacks that are going to happen, right? So in this case, this is a perfect example. So in this case, what I would have done is, you see this move here, it's not quite too clear what happened here. And this is the move that violates both the days, the previous day to the great day, as well as the great day's high, right? So this is not a coincidence. Like I said, price never makes any mistakes. So what I would normally do is, because this move here does not look quite great, right? So I can't really say that this is one linear move to the high side, right? What I would do is I'd go over to the 30-minute chart to just see what really happened there. So we can clearly see that this is really just a move from down here all the way to up there. So that is where I would literally just slap on my fib, and I just wait for price to come into my zone and my hot zone, and then up she goes, right? So that's one way of trading, the pullbacks that are going to happen. Or you could use or take advantage of supply and demand, really. It doesn't really matter what strategy you trade, really. All you need to understand is that, you have to find your bias first in the direction or at a bigger time frame in order for you to be able to successfully trade your smaller time frames. So this is how I do it, right? So now let me give you a few more examples so I can drive the whole point home, right? So let's go over to our daily and let's find some more turning points. So it could be like I said, it could be a pullback or it could be a continuation move. Where did I start off that one first? Let's just continue from that. So, okay, I lost that point again. But anyway, so let's just start here. So we can clearly see that sequence of three candles. This candle here going higher, taking out the previous day. The next candle takes out the previous day's high, but never violates the low. And then we get this big bearish candle taking out the previous day's low, but not going after the high. Thus meaning that we should expect price to move to the downside. Now remember, this candle here is a gray day for me. I don't trade on this day here. On this day here is the gray day. I don't trade. So I'll be looking for trades to happen from this candle on, right? The candle with the X. Let me just put an X above it. This candle here, that's where I'll be looking to sell, right? Now remember, all of these are daily candles. Now, when I go down to my 15-minute chart, I'm literally just taking advantage of the movement that happens within that one candle, right? But I'm aware, and you should also be aware of price structure that happens on the daily chart, right? For instance, I could tell, or you could tell, this here, the move prior, is a continuation to the high side because it breaks all of these moves here, all of these highs here to the left, and you could literally tell that this is a possible pullback, right? And if you took your fib from all the way down there to all the way up there, you can clearly see what happened right there. So it's the same thing happens on each and every one of those. Each and every one of what happens on the 15-minute chart will happen on the daily chart. If you understand what I'm trying to say, price is fractal. So what happens on the 1 minute, 5 minute, 15 will happen or will resonate on all the other bigger time frames. So you all need to start understanding that price structure is the same throughout every single one of those time frames, right? So on this day with the X, that's the day that I'll be looking for, my trades. Let me just put a marker here and go down to the 15. What day is it? It's the 12th of June, right? So if I go to the 15 April, okay, so let's minimize this so we can get there quicker. So April, May, June. And where's my marker? There's my marker right there. So this is a gray day, is it? Let's see. There's a gray day before. Oh yeah, the gray day is before. Let me just remove this. So on the day with the marker, that's where I will be trading, right? Was June. In a minute, guys. So let's go down to 15. That's Feb. Let's minimize this, crunch it all up real quick. April, May, and we're almost there. So here we go. So here's the day with the marker. The day with the marker here, I'm on the 15. Excuse me for that. So you can see, although I'm looking for sells here, right, to take advantage of this move to the downside, sometimes you just won't get, or price won't give you that move, right? And sometimes it will require you to look left to that gray day in order for you to be able to find where you can anchor, say, your fib, or you could, if you're trading supply and demand, have your supply zone marked on there. I'm sure y'all can see that, but you see you can clearly see that it starts from the gray day all the way to the day where you're looking for those or you're looking for those cells, right? So in this particular case, we find a supply zone that starts from the gray day, and we also anchor our fib from the previous day. And you can clearly see that, in both these methods, whether you trade supply and demand or you trade the fibs, you would still have to understand price movement based on the daily chart, or the bias based on the daily chart, and it will resonate, or really follow that rather, on the 15-minute chart. And it really doesn't matter what strategy you trade, just as long as it helps you take advantage of the pullbacks. Now remember, guys, the pullbacks happen because it is a better way for market makers to give the banks a better price for them to start entering their positions, right? So that's really what's happening there. In addition to the fact that they're taking profit, they just want to run out, get all the liquidity that's still hanging around right up there. And that's how supply and demand helps you to take advantage of that, as well as the fibs. But you need to find a system or strategy that will work best for you, that will make you understand these particular concepts that I'm talking about right here, right? So anyway, that's how it would actually look. But in most instances, it won't price won't give you, not most instances, more often, not really more often than not, but in some cases price won't give you any price structure for you to follow, right, based on the 15-minute chart. And that's okay. That just basically means you need to stay out of that particular day, right, and not trade whatsoever. Now let's take a look at different scenarios, and then we'll wrap this video up real quick. So but if we take a look at different scenarios, I want to show you inside day bar. So right here, this is the inside day bar scenario, right? So we can clearly see right here a big bullish candle to the high side, and then followed right after that, it's followed by a small bearish candle, another one, a little bullish one, another bearish one, another bearish one. Now how can you decipher this, and how can you tell that this is a swing? It's the same concept that I've just been explaining right now. Yes, this candle here does not go after the low or the high, right? So therefore, not telling us where price is about to go, right? The key in finding the direction is with the next candle. And as you can see, the next candle takes out the previous day's low with the X, takes out the previous day's low, but it never goes after the previous day's high. Can y'all see that? So this makes this, or qualifies this, as a swing. So therefore, you could go ahead and be like, okay, so this is my gray day here with the arrow, and then from here I'm gonna start looking for sells, right? So you go over to your 15-minute chart again, Let me just take a look when that was. It's the 26th of October, right? So you go over to your 15-minute chart. October, where's my October? December, uh, November, right here. So you go over to your 15-minute chart right after the gray day, and remember what we're looking for. We're looking for price structure break. So we can clearly see here price broke structure right there, right? And if you had taken this one, you would have been burnt, by the way, because it does actually violate your fib or your supply zone right there. Would have violated it, right? So you want to see price structure break, and in this case, price structure break really happens here. Let me show you. Price structure break really happens here. So this is the low that price actually reached. The most important one where price never really came back to test it, right? But the most important low that you want to see price break is this one here, because price never really comes back to it. From that low, it continues all the way up, right? So your price structure, you see on this day, you wouldn't have had any trades as well here. But on this day, you would have had trades, because here's a move that breaks price structure completely, blows it out the water. Now, if you had your fib anchored right there, price comes into your hot zone, you're expecting price to continue on down, so you would have had the confidence to hold on to this particular trade until it reaches your objectives. And look what happens. Two of your trades are filled, you take profit. See what I mean? So right after, the gray day, you may not get trades until you see the price structure break that you want to see. Does that make sense? So in this case, price went after the high here. It just tested it, but still this move kind of invalidated what happened here, by accelerating all the way down like it did right here. Does that make sense? Fantastic. So that's inside day bars. So what you want to see with inside day bars is, so even though the candle is huge, like we just mentioned here, even though the candle is huge, what you want to see is what's going to happen to this candle after it has closed. So the key to understanding that is waiting for this candle here to close without taking the previous day's high, but violating the low. Now you know after this candle here, now you know that price is ready to move to the downside. And that's the only time that you're going to jump in. The same thing applies here. This is again a perfect example. A perfect example right here. Previous candle is low. It's an inside day bar to the previous one, but that's okay because this candle here violates the low of the previous candle, but it does not violate the high of the previous candle. And then the next candle right after that is a big bullish candle which never goes after the previous day's low, but it violates and closes above the previous day's high. So what does that mean for you? You let this one go and you get in on this particular candle here, the bearish candle there. So if you go over to the 15-minute chart one more time, you'll be able to see we're looking at September. We need October, right? It is in October or later. Let's see. There you go. So there, from this day on, what you want to see is price structure breaks, and off the bat you can clearly see price violate this price structure here based on a smaller time frame, and that gives you a way to anchor your fib. Because we're expecting prices to continue on up, look at that, you would have been out with a good profit. If you were trading supply and demand, there's your demand zone, and you would have been in right here, and boom, price continues all the way up. So that's how you can actually be able to anticipate any reversals that are going to happen in the markets itself. And that's the importance of understanding your highs and your lows in relation to price action, But in the meantime, never ever forget your overall bias of your bigger time frame, because like I said here, it's a sequence of higher highs and higher lows. We already know we're going to be making money in continuation patterns, not really patterns, but in continuation moves. When we get pullbacks happen, you need to understand that those pullbacks may not last. So it will be a short-term trade, and I don't like trading those because it could be a day worth of movement, and it could give you smaller pips. So there's no money really in pullbacks. But I'm not saying don't jump on it when the opportunity presents itself. You can do that, but just be aware that it's going to be a short-lived move until a continuation happens, taking out the previous day's high, because you still have to look at price structure on the daily chart as well, right? So now it's the exact same thing, guys. Let me just do this here real quick. It's the exact same thing for long-term traders, right? Or position traders. Normally with my positions, my long-term positions, I'd look at the weekly chart, right? And then I take my trades based on the daily chart. So for instance, let me give you a swing here. So the same thing happens. You want to see a three candle kind of swing, really. One that reaches higher than the one on the left, and the one on the right should be lower and not test the high of the previous candle. So in this case, that's what happened here. But let me show you an easier way, a textbook kind of setup here. This is this one here. See these three candles here? One is bullish to the high side, and then we've got the bearish that reaches below. It doesn't take out the previous candle's high. Let's expand that a little bit. Let's remove the box. So you can clearly see these are, bear in mind guys, that these are weekly candles, right? So within one candle is a week's worth of movement on the daily chart, right? So 5 days really. So this candle here, you can clearly see it's a bullish candle, but in relation to the next candle closes lower than the previous candle's low, right? And it fails to break the high. So this suggests that price is actually going to continue higher, right? But then again, when you see this candle pop up here, breaking the previous day's high, but not breaking the previous day's low, now you know, and you can better anticipate the price is going to start moving moving higher, right? Because this candle, the gray day or the gray week in this case, will be responsible in telling you where price is about to go, right? So in this case, what I would do is I'd see this candle here. Let me just put a marker so we don't lose it. I'll see that candle there, and remember, I'd have to wait for this candle or this week in order for me to be able to start looking for a higher high, higher low sequence to the high side, right? So I'd go over to my daily chart, and let me just find that marker. There's a marker right there. Let me just expand it real quick. There's a marker right here. So right here on this week, or in this week here, I'd be looking for, or from this week on forward, right? Rather, right? Or this would be my starting point for me to look for a sequence of higher highs and higher lows, and it's quite easy and quick to figure that out. So you can clearly see this move here to the high side. That's a move right from the gray area. It went all the way up. If you look to the left, it did not break price structure to the left. See that? In fact, it gave us an equal high to the previous swing, which is here, right? Let me just remove this one. Equal high, and then it tried to retrace a bit. Then eventually, it broke price structure. Now, once it breaks price structure like this, all I had to do, take out my fib, slap it on, and just wait for price to come in to my hot zone, which is here, and off she goes. If you trade supply and demand, same thing would happen, right? The last bearish move prior to that move that violated or that broke price structure, there's the bearish move, bearish candle, and right here would be your demand zone. And as you can see, your stop would have been somewhere down here, and it was never ever tested. So as price came into the zone, it didn't test, or it didn't go down to your stop right there. And even on the second time when it did that, nothing happened here. And then again, here's another opportunity here, but you would have been busted on this one, because right here price comes back and it tests, and it goes all the way down or below, slightly below the previous swing low. All right, so it's the same thing that you can carry over to any time frame, but you need to understand that when you're looking at your weekly chart, what one candles actually means, or what one candle on the weekly chart actually translates to when you're looking at, say, your daily chart, or you're looking at, say, you were trading the 4-hour chart, for instance. You need to understand that, because without that, then you won't be able to understand that, you should be looking for buys, or you should be looking for sales, because whenever you get to a smaller time frame and price just decides to pull back slightly, or based on a smaller time frame, or short-term pullback, you will start to jump on that trend itself, and that would be the wrong bias for you to follow. So it is vitally important, guys, that you understand that you know the only thing that matters, or how you can really tell if price is about to move in the opposite direction, is what happens at the top. Now remember, we're not in the business of trying to call tops and bottoms, right? So it's only best for you to just let it go, like right here, this example here. Let it go on the gray area, or on the gray day. Let it go, and then start looking for your sales on the following day. All right. So now, the lastly, I almost forgot, but the aggressive entries that I was talking about, let me just put a marker real quick, touch on it very quick, right? So the aggressive way of actually going into this is, you will notice that price will give you price structure. So this is 2nd of September, right? So 15, let's go to the 2nd of September. So price will give you price structure that you are anticipating, or hoping for, looking for. Um, Hang on a bit, guys. So this was what, September, right? Where's my marker? December, November, October, September, early. So there's my marker. So let's do this. So the aggressive way of actually going into this is, but what you need to understand is, you need to see price break the previous day's low, and then continue to move right below it. This is the aggressive way to go in. Now remember, on this day here with the box, this would be my gray area, right? I wouldn't be trading here. I wouldn't be looking for price to break price structure and then continue bloody blah fish paste. So I wouldn't be doing this. I wouldn't be looking here. The reason for that is because there's a lot of uncertainty when it comes to the gray area. For all we know, price could give us price structure here and then continue up sharply to the high side, taking out the previous day's low, previous day's high, therefore telling us that, you know what, a continuation is about to happen, and for all we know, this could happen. You know what I mean? So I do not trade the gray days, or on the gray days, I just don't trade. I just let that go. Yeah, I just let that go, right? So this day would be my gray area with the box, right? Or would be my gray day. So the aggressive way that you could actually trade this is, you want to see price move below the previous day's low, right? Now remember, this would be the first day, or the first candle that breaks the previous day's low, right? So when it does this is actually a perfect example. So when it breaks and it continues to move all the way down, you need to know what you're doing, guys, here. And it continues to give you price structure like it does here. So you can clearly see it comes up, it tests the previous day's low, and uses it as resistance just before price collapses from all the way up there to down here. And now this, you see how it violates price structure here? This is the aggressive way for you to actually do it. So the most aggressive way is, you want to see price do this. You want to see a sequence of lower lows and lower highs violating the previous day's low, and price should continue to move in that manner below the previous day's low. So in this case, that's what happened, and the opportunity that you could have had was anchor your fib right up here. That's not a fib, but anchor your fib right up here all the way to down here, and your trades would have been triggered, because look what happens there. After price comes up and it uses the previous days, or the previous days, because this is what the Asian session, but it uses the previous day's low as resistance again just before it collapses to the downside. So this is one of the most aggressive ways that you can do it, right? Like I said, there's a lot of uncertainty when it comes to price structure here, so it'll completely be up to you. if you're going to be trading the gray days or not. I would highly recommend that you wait for these days to conclude and then wait for the following day for you to trade, because that's the most safer way to do it. Look here. Here's some more price structure break here. And if you had given your trade a little room to breathe, which is also what I recommend, right? A little room to breathe in terms of your stop, right? You wouldn't have been stopped out right here. Just as long as you don't put it right where you anchor your stop, where you anchor your fib rather, because that would be where your stop would be located, right? So just give it a little bit of room to breathe, and look what happens. Price collapses from then on in, and it collapses hard. You know what I mean? So opportunities will present themselves after that day. So don't feel the need to trade on this particular day, because this day, like I said, is only responsible to showing us or giving us direction. And that move is, or that candle is this candle here. This candle is only responsible to showing me what's going to happen next. And I only want to jump in on this day here. So when this day opens, I look for my sequence of lower lows and lower highs, because it will be in the same direction as what price is actually suggesting. So a little homework for you guys, right, is what I want you to do is go into your charts and find your swing lows, right? Remember, your swing lows are things that look like something like that. Swing lows and swing highs, right? Go find your swings. Now remember, candles don't really matter how they look, right? But go find your swings that look something like this. That's one type. Go find your swings on your bigger time frame that look like this. And then go down to your smaller time frame and practice what I've just shown you. Now remember, guys, this is not look, it could look like this sometimes. It could be just, it could look like this, just as long as this candle here violates the previous day's low and this candle reaches higher than the previous candle and the next candle. So this candle here, the one that we're observing, this candle here should not take out this high, that high right up there, right? So it could look anything like that, or it could be, say, a hammer, for instance. Could be a hammer followed by another small candle that does not violate the previous candle's high, and it could look something like that, or it could be inside day bars. Just as long as you can clearly see that this is, a turning point based on price structure. Go into the smaller time frames and practice what I've just shown you, and integrate any strategy that you fancy or that you are proficient in, and test it. Really, just go back and test it. You'll clearly start to notice how, it makes trading a whole lot more easier than everybody makes it out to be. All right, guys. So that is it from my end. I hope you've learned a thing or two. Yeah. Until the next lesson, I'm out.